Hi everyone, let's have a look at my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the triangle, because yes, it has been invalidated as expected, because this triangle is not a triangle from an Elliott Wave point of view, as I have explained in many videos by now. And now price moved to the upside, took the high of wave C, and therefore this is now an invalidated triangle, which never was a triangle as explained, mainly because of the volume that has not been decreasing throughout the pattern. Because what you want to see is wave A having the highest amount of volume, and then throughout the rest of the pattern you want to see volume decline instead of here volume moving to the upside. Not what you want to see in a triangle. Besides, this wave B is not a clean zigzag as well, and if one of the zigzags is not clean, it is usually wave C or wave D, so that is also something not really following the Elliott Wave rules. However, what has happened, right? On many of the, let's say, triangle channels, what happened? People are shorting wave E, putting their stop loss either above the trend line or above wave C because they're expecting a move to the downside. All these people have now been stopped out. You don't necessarily need a fake out to the downside to get enough shorts before then eventually a continuation to the upside, because triangle shorters, wave E is in. That is of course the best risk to reward ratio trade. If wave E in a triangle is in, and then you have a relatively short stop loss for a relatively big win. But all these people are now stopped out with price moving to the upside as expected. So yeah, that is actually very nice. Triangle therefore invalidated. So this is also the last video we're going to talk about this triangle. If we then go to the scenario we have been looking at on this channel over here, we have been looking at a WXY scenario instead, which means it's a three-wave structure in wave W, followed by a three-wave structure in a wave X, and then eventually we're looking for upside in a wave Y. This is the preferred scenario, but we were looking for upside and not downside. Now in this scenario, the most common target over here for the white wave Y is between the 0.618 and the 1.236. Relatively big target box. However, because of the bounces we had over here on the 0.618 and the bullish divergences, which I'll explain in a second, this was indeed a very nice area for then a potential move to the upside. And these fibs over here are taken from the high of W to the low of this white W to the high of this white X. Now in this scenario we had the potential trading setup entering at the 0.618 stop loss below the low over here, as that is then the invalidation for a move to the upside. And after seeing this move to the upside at the moment over here with volume increasing as well while price is moving to the upside, it's always good to, in my opinion, no financial advice, but to put the stop loss break even. And if price wants to go to the downside, it can. It is always going to be a break even trade, if not already in profit, because maybe you took a take profit one at this target box, which acts as resistance, as we've already covered, between 27.3k and 27.4k. So now it's just waiting and seeing what price is going to do. And this is the more bullish scenario, so we expect more upside, at least these highs then to be taken, at least the high at 27.7k. However, there are two interesting areas of interest above where price is now and these highs at 27.7k. The first one is over here at 28.3k, so we have a couple of highs there, and we also have the target box a little bit higher, and the target box is sitting between 28.9k and 29.2k. So we have to wait and see how price is going to approach these areas, if it is going to move up to these areas as well, right? But we'll cover that of course on the channel. If we then do think about a potential more bearish scenario, and I actually want to highlight this, in my previous video I did not talk, actually previous videos, I did not talk about a bearish scenario, or at least I didn't draw out any bearish scenario because of the fact they had such a low probability. We were looking at upside, not downside. And in this scenario, this is still a scenario where price is moving to the upside. Now this at the moment is an alternative scenario, mainly because of the volume coming in while price is moving to the upside. But it is good to at least have an alternative scenario, so we are not biased in one direction. So in this way, in this scenario, this is a wave W, but then this wave X is not yet in. So we then have a wave W, a three wave in a wave X, where the most common target area for wave X is between the 1 and the 1.236, which is between 27.4k and 27.7k, which also includes the triple top at 27.5k for maybe then a liquidity grab and then eventually a move to the downside in then the expected wave Y for then a move to the upside. And if we think about that wave Y, we also think about that daily naked point of control at 26,350, as well as then taking this low for then a continuation to the upside. So this is the more bearish scenario, which as it stands now is an alternative mainly because of the volume that is coming in with this move to the upside over here. But it is something we have to keep in mind. Why? Because over here in the preferred scenario at the moment, this wave Y is very, very short compared to this long wave W. So this is something to think about. Wave W here is very, very long. Wave Y is very, very short. And even though Elliott waves, they do have price relationships, they also have time relationships. So it's something to keep in mind that, yeah, we are at resistance at the moment. Price might still dip to the downside, and then of course depending on how it comes to the downside, we might have another setup over here for then a continuation back to the upside, expecting still that wave Y to the upside to at least take the 27.7k highs over there. If we then go to the micro scenario, then there's two options, either a 3-wave structure or a 5-wave structure. So the 3-wave structure, which is actually the one I had on my chart yesterday as well, where this is then a 3-wave structure to begin with, then you have a corrective structure followed up by another 3-wave structure to the upside. But of course, seeing the volume over here, if this is a potential like ABC or a WXY, you actually don't really want to see increasing volume in that final wave to the upside. So therefore, we also have to think about the very bullish scenario, which in this case is a wave 1, 2, followed by another 1, 2, and then eventually now a bigger 3 to the upside, which therefore also explains the increased volume to the upside. In this scenario, a 1, 2, 1, 2 is like you want to see a 1, 2, 1, 2, which is a wave 1, 2, and the second one is taking the high of the first wave 1. That is important and also by far most common in Elliott waves. So in this scenario, we expect a continuation towards the upside and then another bigger 3. And if we take a little look at, for example, some targets, then let's take a target of the blue count over here. We put on the wave 3 targets, and then a minimum target has already been reached, by the way, so we could be ranging for a 4, but as you can see, targets can go all the way to the upside for an impulsive wave 3, so we have to wait and see how this is going to develop. Most importantly, and as explained, price has to move through this target box, and at the moment it is ranging inside this target area between 27.3 and 27.4, so it is important for the more bullish scenario where we are going to find continuation to pass this target box. This is my main resistance before price could move and continue to the upside. If you then think about the divergences, which also supported a scenario to the bullish side, the upside, we were looking at this bullish CVD divergence, which I said this is the first one that existed on the chart. So higher low on price, but a lower low on the CVD chart, which I actually like to show you again over here. So we have over here higher low on price, but on the blue line, lower low on the CVD, which is a bullish divergence. And this was the first divergence on the chart. After this bullish divergence, we got this bearish divergence, which as it stands now has not yet played out because the target would have been 26.3k. And the invalidation is very close to be reached over here. But as I also said, the first divergence from my experience and my statistics has the highest probability of playing out. And the first divergence that it started to exist in this range was this bullish divergence with a target over here at 27.6k. So this one has the highest probability of playing out. And then when price moved to the downside after creating these bearish divergences, it moved down in 3 waves and it created bullish divergences while also finding support on the 0.618. Brilliant, right? So then now we have this push to the upside and we have to wait and see how price is either going to continue in the bullish scenario, right, where we are going to basically play out these bullish CVD divergences and take this high, or potentially a move to the downside. But at the moment as it stands, volume is increasing while price is moving to the upside, which is a bullish sign. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.